Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly structure level. In fact, this area was acting as previous monthly support here, preceding this rejection to the upside. The market has then broken below the zone, and that previous support was turned resistance here. Now the market has broken back above the level, so this previous resistance is now turned support at this level, and we could expect a potential rejection to the upside away from this area. We can also notice that if from here the market will create a rejection to the upside, we would have the creation of this inverted head and shoulders from a monthly standpoint, and also the completion of this monthly impulse correction and impulse pattern to the upside. In fact, as we have in impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg here from a monthly perspective. And this clearly shows how we do in fact have previous monthly resistance turned support, exactly this area, lining up with the 50% and 0.618 Fibonacci retracements. Now, this creates confluence of support at this area because we have both the Fibonacci levels and the horizontal resistance turned support both lining up exactly in the same area of price, therefore creating confluence of support from a monthly standpoint. Now, if we drop down on the weekly time frame, what do we have? Now here on the weekly, we can see how we have a quite strong horizontal historical structure also here from a weekly standpoint. This area was acting as previous weekly support here, turned weekly resistance here. The market then broke above the zone and was turned against support. And at the moment it is once again acting as support. The market has already tested it, started to reject it to the upside. So more bullish continuation in a situation like this could be expected away from this level. Going down on the daily time frame, what do we have? Well, before we go deeper into the technicals from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. Now, the first thing to keep in mind is that if we're checking data for the NZD, we're actually already checking NZDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we went from having a negative net positioning of minus 1k net positions up to having a positive net positioning of plus 830 net positions. This means that institutions went from having more shorts than longs on the NZDUSD to now having more longs than shorts. Therefore, they have started moving back to the bullish side for NZDUSD. And this institutional longing increases the probabilities of a potential rejection to the upside for this pair from the confluence of support that we have previously identified when we were looking at the monthly time frame. So continuing the analysis here from a daily perspective, we can notice how also here on the daily, the market has now broken daily structure to the upside. This area is in fact previous daily resistance, which is now turned support, and we could expect a potential rejection to the upside away from such a support level. Therefore, inside of a zone like this, there is definitely the possibility to see some institutional longing that would further increase the probabilities of a potential rejection to the upside away from this level. Therefore, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional standpoint. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.